If I asked you right now, is your business financially healthy? Would you be able to give me a confident answer? Most business owners can't, and that's a problem. I'm Annette Ferguson. I am CEO of Annette Co, UK-based accounting firm. I'm a chartered accountant, certified profit first professional, and small business financial strategist. And today, I'm going to help you discover the true financial health of your business. By the end of this video, you'll know exactly where your business stands financially, what warning signs of financial trouble look like, and most importantly, what to do about it. I'll also share with you the same assessment tool that I use with clients to get a complete picture of their business's financial health. This isn't just about whether you're making money. Financial health goes much deeper than that. A business can be profitable but still be in serious financial trouble. Today you'll learn how to spot the difference and what it means for your business's future. So if you want to know whether your business is truly financially healthy or if there are some hidden problems that could threaten your success, let's dive in. And before we start the assessment, I want to tell you a story that perfectly illustrates why financial health matters more than just profitability. I had a client, let's call her Emma, who ran a successful design consulting agency. On paper, her business looked great. She was billing £8,000 a month, her profit margins were healthy, and she was growing. But when we did a proper financial health assessment, we discovered some serious problems. She had no cash reserves. Her clients were taking 60 to 90 days to pay. She had no systems for tracking her true costs, and she was one major client loss away from serious trouble. Despite being profitable, her business was financially unhealthy. 6 months later, she lost her biggest client. And because she had no financial cushion and poor cash flow management, she nearly had to close the business. That's the difference between profit and financial health. Financial health isn't just about making money. It's about having a business that's resilient, sustainable, and positioned for growth. Today, we're going to assess your business across 5 critical areas: cash flow and reserves, profitability and margins, financial systems and tracking, risk management and diversification, and growth sustainability. Now, what we'll do today is a quick assessment that will give you a good sense of where you stand. By the end, I'll share with you a comprehensive financial check that goes much deeper and gives you a detailed score and action plan for your specific business. Let's start with the first pillar. The first pillar of financial health is cash flow and reserves. This is about whether you have enough cash to operate your business smoothly and handle unexpected challenges. Let me ask you some questions, and I want you to honestly assess where your business stands. Firstly, do you know exactly how much cash your business has right now? Not just in your main bank account, but across all business accounts. If you can't answer that immediately, that's already a warning sign. Secondly, do you have at least 3 months of business expenses in reserves? This means if no money came in for the next 3 months, you'd still be able to pay all the bills, including paying yourself. Third, do you know when your outstanding invoices will be paid? Do you have a system for tracking and following up with overdue payments? And fourth, can you predict your cash flow in the next 12, 13 weeks, 3 months? Do you know when money is coming in and when major expenses are due? Here are some red flags for cash flow health. You're constantly worrying about making payroll or paying bills. You're using credit cards or overdrafts to cover regular expenses. You don't know your cash position without checking your bank balance. You have no reserves for emergencies or opportunities. And some green flags are that you have at least 3 months expenses in reserves. You know your cash position at all times. You have predictable cash flow and rarely worry about paying the bills. And you can take advantage of opportunities without financial stresses. Based on these questions, how would you rate your cash flow health on a scale of 1 to 10? Be honest. This is about understanding where you are so you can improve. There is no judgment on this number. If you scored 7 or above, you're in good shape. If you scored 4 to 6, you need to focus on improving your cash flow management. And if you scored below 4, then this should be an immediate priority for you in your business. The second pillar is profitability and margins. This isn't just about whether you're making money, but whether you're making enough money and whether your profit margins are sustainable. Here are the key questions. Do you know your true profit margin after expenses? That includes paying yourself properly and tax. Many business owners think they are profitable, but they're not actually paying themselves a market rate salary for the job they're doing in their business. Do you know which services or products are most profitable? Can you identify what makes you money and what costs you money? Are your profit margins improving, staying the same, or declining over time? This trend can often be more important than the absolute number. Do you have a target profit margin that you're actually working to achieve, or are you just hoping that profit might be left over after the expenses? Here are some rough benchmarks for service-based businesses. If your profit margin is below 10%, you're potentially in the danger zone. 10 to 20% is acceptable, but not great, and 20 to 30% is good. Above 30 is excellent. But remember, these are rough guidelines. What matters more is whether your margins are sufficient to pay yourself properly, build reserves, invest in growth, and handle unexpected challenges. Some red flags for profitability. You're working harder, but you're not making money. You don't know which services are most profitable. Your margins are declining over time. You're not paying yourself a proper salary, and you're consistently competing on price. And some green flags. You have healthy, consistent profit margins. You know exactly which services make you the most money. Your margins are stable or improving. You pay yourself properly and still have money left for the business. And you compete on value and not price. Rate your profitability health on a scale of 1 to 10. Remember, this isn't just about making money, it's about making enough sustainably. And the third pillar is financial systems and tracking. You can't manage what you don't measure, and you can't measure what you don't track properly. So here are the critical questions. Do you have a proper accounting system that gives you real-time visibility into your finances, or are you relying on bank statements and spreadsheets cobbled together? Do you reconcile your accounts monthly? That means making sure your accounting records match your bank statements. Do you track key performance indicators beyond just revenue, things like average project value or client acquisition costs, customer lifetime value? Do you have separate accounts for different purposes, revenue, profit, taxes, expenses, or is everything just mixed up into one account? Here's what good financial tracking looks like. You know your numbers in real time, not just at year end. You can quickly answer questions about revenue, expenses, profit, and cash flow. You have systems that automatically categorize and track transactions. And you regularly review your financial reports using them to support decision making. Some red flags for financial systems. You only look at your numbers once a year when doing taxes. You can't quickly tell someone your revenue or profit for the last month. You're using spreadsheets for everything. You don't reconcile bank accounts. You make decisions financially based on gut feel and ignore the data. Some green flags. You have real-time visibility on your finances. You use proper accounting software. Money is reconciled monthly. You track key metrics beyond just revenue, and you make data-driven financial decisions. Rate your financial systems and tracking on a scale of 1 to 10. Good systems are the foundation for financial health. Without them, you're flying blind. The fourth pillar is risk management and diversification. This is about how well your business can handle unexpected challenges and whether you're too dependent on any single source of revenue. The key question for this pillar: what percentage of your revenue comes from your largest client? Is it more than 30%? If so, you have concentration risk. How many different revenue streams do you have? Are you dependent on just one service or product? Do you have proper insurance cover for your business? Professional indemnity insurance, public liability insurance, and any other relevant cover. You are legally required to have employer's liability insurance if you have employees. What would happen to your business if you couldn't work for 3 months? Do you have the systems and people in place to keep things running? Good diversification looks like this. No single client represents more than 20 to 30% of your revenue. You have multiple revenue streams or service offerings. You have recurring revenue, not just project-based income. And you have systems that don't entirely depend on you personally. Now, some red flags for risk management. One client represents more than 50% of your revenue. You have only one revenue stream. You have no or little insurance cover. Your business completely depends on you personally, and you have no plan to handle emergencies or disruptions. And some green flags. Your revenue is well diversified across multiple clients. You have multiple revenue streams. You have the appropriate level of insurance cover. Your business can operate without you for short periods of time, and you have emergency plans and procedures in place. Rate your risk management and diversification on a scale of 1 to 10. This pillar is about building resilience into your business. Pillar 5, growth sustainability. This is about whether your business is positioned for healthy, profitable growth or whether growth would actually create more problems. The critical question for growth sustainability is, do you have the systems and processes to handle 50% more business without major stress? So are your profit margins stable or improving as you grow? Some businesses actually become less profitable as they grow because they don't have proper systems. Do you have access to the capital that you'd need to fund growth? Remember, growth often requires investment before you see the return. Do you have a clear plan for scaling your operations? This includes potentially hiring team members, improving systems, or expanding your service offerings. Sustainable growth can look like your systems handling an increased volume, profit margins improving or staying stable as you grow, having access to growth capital, having a clear scaling plan. You're growing strategically, not just taking on any work that comes in your direction. And some red flags for growth sustainability. You're already overwhelmed with your current workload. Your profit margins decrease as you get busier. You have no systems for handling more clients. You're growing by accident and not by design. And you can't afford to invest in the resources needed for growth. Some green flags are that you have capacity for more business, your systems are sustainable, your margins are improving with volume, you have a clear growth strategy, and you can invest in growth opportunities. So rate your growth sustainability on a scale of 1 to 10. This pillar determines whether growth will strengthen your business or stress it. So now let's calculate your overall financial health score. Add up the scores from all these 5 pillars we've just spoken about and divide by 5. This gives you your overall financial health rating. Here's what the score means. 8 to 10, excellent financial health. Your business is well positioned for growth and you can handle challenges. 6 or 7 means good financial health with some areas for improvement. Focus on your lowest scoring pillars if you're scoring a 6 to 7. 4 to 5, moderate financial health. You do need to address several areas to improve your business's resilience. And 1 to 3, poor financial health. Your business is at risk and it needs immediate attention. But here's the most important thing. This assessment is just the beginning. Knowing your score is useful, but what really matters is having a dedicated action plan for improving your financial health. So this is why I've created a comprehensive financial health check specifically for UK service-based businesses. It goes much deeper than what we've covered today, and it analyzes multiple aspects of your business finances to give you a much more detailed score and action plan. The assessment will take about 15 minutes to complete, but you'll get the results straight away, showing you exactly where your business stands and what steps you need to take to improve your financial health. So here's what you'll get. You'll get your financial health score across multiple categories, specific recommendations for your business, and you can get a prioritized action plan highlighting what to focus on first. So you can access that by clicking the link in the description to this video. You can put in your details and that will come straight to your inbox as well. This assessment has helped many service business owners identify the hidden problems and find the opportunities that actually exist in their business as well. It's completely free. There is no obligation to do anything with it at all. It's genuinely designed to help you understand and improve your business's financial health. So let's recap what we've covered today. We've assessed your business across 5 critical pillars: cash flow and reserves, profitability and margins, financial systems and tracking, risk management and diversification, and growth sustainability. Here's what I want you to do right now. First of all, if you haven't already, calculate that overall financial health score from what we've gone through today. Secondly, identify the lowest scoring pillar. That's where you need your attention first. And third, make sure you download that financial health check. The link is in the description so you can get more detailed analysis and action plans. It's completely free and it will give you insights into how you can transform your business. Again, the link to that is in the description. If you found this video helpful, please do make sure that you subscribe to our channel. Turn on the bell so that you know next time we upload a video. We also have a Facebook community, Profit First UK, where you can get ongoing support for your business, again, completely for free. Again, the link is in the description. Before you go, I'd love to hear from you in the comments as well. What was your overall financial health score? Are you willing to share that with us in the comments? Or you can let me know which pillar was your strongest and which one needs most work. Your insights are going to be helpful in helping me develop and support you more. Thank you so much for tuning in today. I appreciate your time. I know it is incredibly precious. So thank you for spending some of that with me here today. Remember, financial health isn't a destination, it's an ongoing process. The sooner you start measuring and improving it, the stronger and more resilient your business will become. I will see you soon.